9:30 Eastern Time, a live look here into New York City. Markets reacting positively this morning after Federal Reserve Chairman Jerome Powell's testimony in front of a Senate panel yesterday. Powell's willingness to reduce interest rates by September will be tested, however, by the inflation data set. That's going to come out tomorrow.
Let's break it all down. Here to weigh in is Brandon Arnold. He's the Executive Vice President of the National Taxpayers Union. And Rebecca Walser is the President of Walser Wealth Management. Thank you so much for being here. Good to see you in studio. Powell saying yesterday that the holding rates are high, too long, and that could jeopardize the economic growth. Let's watch.
We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment.
So a lot of people keeping their eye on this. Brandon, do you think that the Fed is going to begin cutting rates in September?
Well, I certainly hope so. You know, we talk about the inflation rate. It's been basically level for about a year now. But what hasn't been flat is the amount of debt that Americans have taken on. The average American now has about $6,500 in credit card debt right now. So those inflation rates, those interest rates, high interest rates, make it extraordinarily difficult for people to pay off that debt and restore their fiscal stability. And I think that needs to be a driving factor when the Fed considers what to do with interest rates. They need to bring them down.
Yeah, great point. You think about how people are making do with the lack of finances. You just put it on a credit card and you worry about it later. Keep accruing that credit card debt. Very unfortunate. Let's talk about those interest rates and how it impacts the housing market. Inventory of both new and existing homes finally on the rise, according to the CNBC report. But now something strange is happening in the numbers. The supply of newly built homes appears to be too high. Rebecca, why is that the case? Why could these numbers be deceiving?
Well, you know, we had a pandemic rush, Emma, of basically, you know, everyone's going, the interest rates were extraordinarily low and people were staying at home. They were upgrading. So it was this huge boom for the housing market, which is really odd considering we were in an economic malaise with 2020 pandemic. But it really did stimulate a lot of economic growth and delivery. And so a lot of that inventory got sucked up and it has not even been rebuilt. And even with these higher rates, it's just now getting to be rebuilt. What was happening is you have the new home construction, basically, they're able to give cheaper financing than a resale who's going to have to get a mortgage from a bank, right? Because they can buy the rate down as a big company. And so you still had really strong sales, which was keeping inventory from building up. But now with the consumer really pocketbook starting to really hurt, you're starting to see people a lot more say, gosh, we're in a 3 or 4% rate or less in our current existing mortgage. And if we upgrade or downgrade, we're going to be in a 6 or 7. So even if you go down in price because of the interest rates. So now people are starting to pull back some, and you're starting to see a higher inventory in the new home sales. The reason that new homes ticking up more is because it's more expensive with the cost of housing. Everything's more expensive. So as rates still remain high, the existing sales that are in the lower market, sub 500,000, that's where the inventory is coming onto market and going off in less than 3 months, which is super fast.
Do you see this coming down anytime soon, though?
I mean, 6 months supply is where the 6 month turnover is where there's a balance between supply and demand. We're still at 4.4. So really, it still says the sellers are in control since but honestly, truly, you still are getting double bids and all those things. But with rates this high, how many consumers can still afford to go out and buy right now is the question.
Yeah, great point. Also, big ticket items that people consider purchasing are new vehicles. Brandon, I wanted to ask you about the demand for electric cars. You know, we've talked about this several times, but there's a new report out that Volkswagen is now considering a plant closure in Brussels due to weak EV demand. Does this come as a surprise to you, Brandon, now considering the economic environment we're living through?
No, not at all. I mean, I think EVs are going to be fine. There's a lot of people that love EVs. There's a lot of people that hate them, and that's fine. What we should allow is the market to sort this out. If consumers want to buy EVs, that's great. More power to them. If they don't, well, that's their decision, too. The problem has been that the government has put its thumb on the scale and spent trillions of dollars, hundreds of billions of dollars, I should say, to try to subsidize the EV market through tax credits, through infrastructure subsidization. You know, they've spent $7.5 billion couple years ago to build out EV infrastructure, and so far they've built 8 charging stations, 8 charging stations for $7.5 billion. It doesn't make sense. Get the government out of this market, allow consumers to decide what they want to drive, and companies will make better decisions accordingly.
Not only that, those charging stations, there's reports that some of them don't even work. They can't get electricians to go and fix them, so people can't go and charge their cars with the ones that are already operational. Yeah. But you look at it, Tesla also they're selling cars. I was talking to a Tesla owner. He said he's paid $70 grand for a car. They're selling them for something like $40,000 now. So it's one of those things where, they're forcing these EVs on us, Rebecca, but people aren't buying them.
It's so funny because, to Brandon's point, China really invaded the European market with their heavily subsidized EV prices, and that's why the Audi and the European Volkswagen models aren't selling as fast. And they're like, well, we can't do this. Now they're slapping tariffs on the Chinese imported EVs. It's like, you didn't realize this was going to be the economic response. This is normal. Like, if it's coming in cheaper, we're going to buy it there. And especially when it is some more of a government-driven climate change kind of policy and not capitalism, where people are just saying, I want this because it's great to install a really fast-paced electrical thing and then make my electrical bill go up so much every month.
Yeah. It's just so typical of the government, though, to do these millions of dollars worth of programs and then have nothing to show for it. I mean, just a handful of chargers after all this time and money. Ridiculous.
Incompetence.
Totally. Brandon and Rebecca, always great to talk to you both. Thanks so much for coming on today.